the airport and this thing doesn't work. Like, are you still going to be able to travel? I don't know. And you gotta, you know, it's also, it might allow you on the plane, but where this could head to is like not only something that you could use for travel, but you could see it being used at a gym or a restaurant or a store even. So all of that is a big TK to come. We don't know what it means yet. We don't know if any of those are there yet. The first place that we're going to see it will be airports and perhaps entering countries. Yeah. And for those people, you know, if you're like Greece is one of the examples that Jim probably spoke about. You're a tourist-dependent economy, like you are just yearning to get more people in your country and get over the past year. So the hope of these vaccine passports is that a version of normalcy might return for places that are desperate for tourism dollars.
Joel, can I just tell you, first of all, on Nexi, which is our internal conferencing for our audience, I know, Joel, you know what it is. He just, Tim just held up his...
It's like our Zoom.
Yes, exactly. Tim just held up for me his little yellow vaccine card that he had on with him, like just like that.
What I really want to see is Tim. I want Tim to go on a vacation with that, and we'll find out how it goes.
I'm just wondering, do you wear socks with sandals, Tim? Are you one of those?
Hey, no comment, okay? What I do on vacation is what I do on vacation.
Stays on vacation.
I'll let him have that. But, you know, the other interesting things that I think come up in this package are the biggest thing of all that the pandemic has revealed is this world of inequality and the haves and the have-nots. And here again is another example of it, of the people who will have vaccine passports and everyone else who won't. And that even goes for locals who, you know, you might go to Greece, but like, you know, everyone that you're seeing there might not be vaccinated yet. And it also raises all these concerns about the varying efficacies of the vaccines, because none of them are 100%. We know that there are many variants out there, so it also has somewhat of a false security to it. And all of that, you know, we hope that the pandemic comes to an end, but some of these things may end up prolonging it too.
Yeah.
Hey, Joel, when you think about a business takeover for the magazine, and when you're, you know, seriously thinking about what you're going to feature, take us into a little bit about how the sausage is made and how you decide on one of these topics, especially one like vaccine passports.
So we do these packages. I try to do them. We try to do them at Business Week with regularity, and we think about finding a topic that we all find interesting. And then we try and look at that topic from as many different angles as we can, always through the lens of business. And so vaccine passport was a thing that, as some of the members of the staff, of the Business Week staff, started to get vaccinated and float the ideas of vacations, we were all like, wait a second, how is this going to work? And so then we just started asking people in the newsroom as many questions as we could of like, and that spawned, you know, this multifaceted package that we brought to life in the magazine. And you know, elements of travel and health and tech, and then we try and also have some graphics. So we have many more like that to come. They're some of my most favorite things, and we always think of them as something that's worthy of the cover when we embark on those projects.
Hey, we just have about 40 seconds, 45, 50 seconds. Tee up something else in the magazine that you like.
Oh, we've got so much more. A couple more of my favorites. There's a COVID pill that Merck has under development. We should see data for that by the end of the month. It's going to be a really interesting thing. We've heard enough about vaccines at this point. This is a treatment, and we have so few of those for COVID. And what the Merck one represents, which we expect to be one of the first, is one of the farthest along and is in late stage trials. It's a whole other dimension in the fight against COVID, which is when someone's really sick, like maybe you can give them something even before they're really sick that can head off the worst.
All right, and there's also a fun thing in Pursuits, finding your happy place, and anything that Kate Crater does, I'm like, I'm there, I'm totally there.
Yeah, it's a great little food-centric package because as the weather gets nicer, it's like, let's do some more eating outside, right?
I'm in, count me up. All right, Joel, thank you so much. Have a great weekend. Joel Weber, editor of Bloomberg Business Week. That issue, it is on newsstands, it's online and on the Bloomberg terminal. Be sure to check it out throughout the weekend because there's lots of great interactive and audio and all these different elements around it. All right, for those of you listening in New York, D.C., and San Francisco, watching on YouTube, Bloomberg Business Week, Tim and I, we're going to continue. If you're listening on Bloomberg 106.1 in Boston, Bay State Business is coming up next. We're going to talk about what has unquestionably been one of the biggest stories of the week.
Yeah, we're talking Suez Canal blockage.
Totally. This is
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Final trading hour of the week. We've got stocks mixed right now. The Dow, the S&P, they're both higher. NASDAQ on the minus side. Choppy session. Bottom line, those stocks higher on optimism over the vaccine rollout. And after the Federal Reserve freed banks from restrictions on dividends, oil is gaining as the dollar slumps. Right now, West Texas Intermediate crude up 4.1%, $60.96 a barrel. 10-year, 1.65%. Stocks, as I mentioned, mixed with the S&P up 28, a gain of 0.7%. The Dow up 198, higher by 0.6%. But NASDAQ turning negative, down 13 points, a drop of 0.1%, while the NASDAQ 100 index is up by 0.2%. Russell 2000 up 0.5%. Dow Transport's up 1.4%. And now looking at a full 3% jump for the Philadelphia Stock Exchange's semiconductor stock index. The SOX up now by 3%. Gold is up 0.2%, $17.31 the ounce, and again, crude up 4.1%. Federal Reserve Bank of Philadelphia President Patrick Harker says inflation is set to be contained just above the Federal Reserve's 2% target, and rising market interest rates are a sign of optimism about the economic recovery from the coronavirus pandemic. Harker was interviewed this morning on Bloomberg Television and Radio.
Until we get through this period, we're going to see a lot of volatility in all these measures, and that makes them hard to read. So for me as a policymaker, in that kind of situation, I want to hold steady, make sure we get through this period, then we can start to normalize once we get through this.
Florida Governor Ron DeSantis is calling on the U.S. government to let cruises sail again, calling the sector a key employer in his state. Among some of the cruise line stocks, Carnival Corp down 9/10, Royal Caribbean down 5/10, Norwegian up 8/10. I'm Charlie Pellet. That is a Bloomberg Business Flash.
You're listening to Bloomberg Business Week with Carol Messer and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
So I'm thinking, Tim, it's probably already been a Jeopardy question, but it is unquestionably one of our top stories this week, a top story every day, including today. And the answer is?
What is the Suez Canal?
Nicely done.
Oh, wow. I'm not even good at Jeopardy.
We didn't even rehearse that.
I didn't. We didn't.
I love when it works out. The other question is, what's up with the massive container vessel that's blocking it? And we're hearing it's going to take longer, right, than we all thought to unblock it.
Yeah, Bloomberg reporting that it could take until Wednesday to get this thing dislodged.
Yeah, so listen, we're going to get into why it is why it is so important. Keep in mind, it was built hundreds of years ago, not hundreds of years ago, but 150 years ago. Yeah, give or take.
All right, some mental math there. I can deal with it.
I need my fingers on this one. Bloomberg News energy reporter Robert Tuttle joining us on the phone in Calgary. Hey, Robert, love your story. You can ask my team when I'm like, oh, we've got him, yay, because I feel like, let's explain the Suez Canal. I think these are things we either learned about in grade school history and then just kind of threw it away and just take it for granted when it comes to moving trade around, but it's really important.
Yeah, I mean, it's hugely important. As you said, it was built more than a century ago, went into operation in 1869. It's played a central role since it's been open, it's played a central role through 2 world wars, revolutions. It's been a really important conduit for the world. One could say it almost helped hold together the British Empire to some extent for a while there. I mean, it holds today, it carries about 12% of the world's trade goes through it. It's the biggest, probably the most important aspect of that trade is, of course, oil. You know, the Saudi Arabia, the world's biggest exporter, sends oil through the canal to Europe and to North America. Oil comes the other way, as does to reach Asian markets from wherever, West Africa, from the U.S. But it's absolutely essential. Plays an essential role in world trade, and so its blockage is costing quite a bit of money, holding up about $10 billion of goods a day that are just waiting there.
Now, Robert, as you wrote in your piece, that answers many questions about the Suez Canal. If you don't go through the Suez Canal, like Mideast crude oil to Europe, for example, would have to travel an extra 6,000 miles. It could cost hundreds of thousands of dollars, not just in extra fuel costs, but of course, extra time.
Yeah, it's about an extra 15-day journey. The bunker fuel, the fuel cost for the ships, you'll get roughly $300,000. I guess that's what we're hearing right now. It is offset somewhat by the tolls to go through the canal, which can cost hundreds of thousands of dollars.
Okay, I just have to stop you there. I did not know until I read this piece, Robert, that the Suez Canal had tolls that cost. I never thought about the Suez Canal up until now. I think, like many people listening, but hundreds of thousands of dollars in tolls to go through it.
Yeah, for a big tanker or shipping container for a big container vessel like the one that got stuck. Yeah, it's an enormous expense. But I mean, when you consider how much they're carrying and how much the money they're going to make off that, it's not a massive amount. But it is. Yeah, and the canal itself is a huge money earner for the Egyptian government. I think. Last year, it was more than $5 billion it brought in. They're trying to actually double that by increasing traffic. There's a big plan to expand the canal. But it is, I mean, if you showed up on a little sailboat, which some people do, I don't know what the cost of sailing that through, but a huge container vessel,
No
quite a
easy,
bit,
no easy pass on that one, right? Or no, like counting my quarters, that are like on the floor of my car, like it used to be on the Garden State Parkway. Yeah, it's like, but it's wild. There are, when it comes to trade, like again, I was saying earlier, we all take it for we take it for granted. Stuff just gets here, but there are specific highways, and if you ever spend time on the water, there are shipping channels. Like there are very specific routes that these guys are constantly, these big barges, these big container ships, that's what they use regularly.
Yeah, that's right. I mean, when something like this happens, these shipping companies have to look, and they have to think, well, what do I do? Am I going to stay here parked until they open this? We don't know when that'll be. Maybe it'll be a week. Maybe it'll take several weeks. Or do I move and just spend the money and go around the Cape of Good Hope, around Africa? It's a tough decision. We've lived without the canal before. In 1967, the war between Israel and its Arab neighbors resulted in the canal being shut for a full 8 years. And you imagine they had to completely reroute everything during that time. There was an interesting story about that, was that the number of several ships, I think a dozen, got stuck in the canal, and the sailors were sort of left there for that entire period of time, sort of having to fend for themselves until they could reopen. And it was called the Yellow Fleet.
But Robert, and look, that's an extraordinary thing to have happen then. But since then, global trade has absolutely exploded. Globalization has exploded, and it's a completely different world now, right?
Yeah. Oh, for sure. I mean, the amount of global trade, and it's evident by the size of this ship. Ships themselves the container ships have grown like double in size in the last 10 years because they're trying to fit as much as they can on each ship so that they can lower the costs. And what you end up with is this, massive ship that's like the Empire State Building. It's as long as the Empire State Building is high, and it's and when they get stuck, well, that creates a huge problem. That's going to be a problem in the future, if we don't find ways to deal with this.
Yeah, these ships are getting bigger and bigger. I just remember the Port of Miami and all these ports up and down the East Coast just competing for all these large container ships and kind of widening their ports and able to, be able to take them in. Hey, Robert, great reporting. Robert Tuttle, energy reporter at Bloomberg News, on the phone from Calgary. Everything you wanted to know about the Suez Canal.
Yeah, it's a great story. Let's get a quick check of national and world news. Nancy Lyons in D.C. Hey, Nancy.
Hey, Tim. President Biden is reportedly putting together a big climate summit. Officials tell the Associated Press he's invited Russian President Vladimir Putin and Chinese President Xi Jinping to attend the meeting on April 22nd and 23rd. Well, the Biden administration might not be too concerned about running a large deficit right now, but for one government agency, that's usually a cue to start sounding alarms.
The Congressional Budget Office is the nonpartisan agency whose job it is to determine how new legislation affects the public finances. Now, it's in a tough spot as President Biden prepares to announce an economic package that could cost as much as $3 trillion on top of the $1.9 trillion pandemic stimulus. The CBO tends to be on the hawkish side of budget arguments, but it has persistently overestimated government borrowing costs. Treasury Secretary Janet Yellen has argued low interest rates rather than debt to GDP is a better measure for determining how much spending room the country has. In Washington, I'm Nathan Hager, Bloomberg Radio.
Dominion Voting Systems says it's filed a $1.6 billion defamation lawsuit against Fox News, arguing the cable news giant falsely claimed the voting company had rigged the 2020 election. Well, the former president appeared on Fox News last night and said the January 6th attack on the U.S. Capitol never posed a danger.
It was zero threat. Look, they went in. They shouldn't have done it. Some of them went in and they're hugging and kissing the police and the guards. They had great relationships.
Trump was on the Laura Ingraham show. 5 people died as a result of the attack. Global news 24 hours a day, on air and on Bloomberg Quick Take. Powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
All right, Nance, thank you so much. And Tim, we were worried about bonuses.
Don't worry about bonuses, at least for Wall Street bonuses.
No. Listen, this story by our Jenny Serrain. The average Wall Street bonus climbed 10% last year as the pandemic fueled market volatility and a surge in underwriting. So, Tim, the typical bonus paid to employees in New York securities industry climbed to
$184,000. That's according to calculations by the comptroller for New York State, Thomas DiNapoli. This was in line with the state's projections, meaning that the city will likely meet or exceed its income tax revenue projections for fiscal 2021. There are a couple stories in this, right? The one story, of course, is how well Wall Street did during the pandemic. And nobody knew a year ago that this is how it was going to play out. The other part of this, and you know, Carol, I love talking about this, municipal finance, right? And the fact that because of tax revenue, because this is why the comptroller is talking about it, the city will actually meet or exceed the state will meet or exceed its income tax revenue projections in fiscal 2021. This was a big concern.
Yeah, listen, this is a really good point. How many stories have we talked about over the past year specifically saying, okay, with the pandemic, the shutdown, municipalities, states, towns, cities, they were all struggling as those economies were shut down, businesses were shut down, and tax revenue wasn't coming in. And this was certainly one of the arguments that a lot of states took to the federal government to said, hey, listen, we need a helping hand. And in the meantime, they had to make sure that they were taking care of testing and other things to get COVID under control.
And the states did get a helping hand from the federal government in several different ways. The other part of this that we've talked about over the last few weeks has been the way that tax revenue from online sales have actually significantly helped. And that's thanks to a Supreme Court case a few years ago. So if you bought something on Amazon or if you bought something from another online retailer and paid sales tax on it, your city or state got that funds.
Yeah, exactly. And it didn't used to be that way. If there wasn't, I think, not an actually brick and mortar, right, in your home state, you didn't have to pay the taxes. So listen, c'est la vie, Allah, it's not so bad. Bonuses are up 10%.
$184,000.
People around the country are like, what?
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. NASDAQ back on the plus side. Little changed on the NASDAQ Composite Index. Been a choppy session. The Dow, the S&P, they're both higher as well. Let's get the very latest now as we head right over to the First Word breaking news desk for today's afternoon call. And here he is, Bailey Lipschultz.
And good afternoon, Charlie. As you said, stocks are mostly trading higher, though it has been a rocky road, fueled by optimism over the vaccine rollout. The Dow is up 200 points, S&P higher by 30, while the NASDAQ is now little changed. U.S. 10-year yield is at 1.66%, and small caps are higher by 15 points. 8 of the 11 main S&P sectors are trading higher, led by gains in materials and energy, while communication services and consumer discretionary are trading lower. NASDAQ Biotechs fell 45 points, transports gained 1.5%, semis rose 95 points, while the VIX is higher by 2%. Leaders in the Dow, Intel, Cisco, and Nike, while Boeing, Goldman, and Disney are the worst performers. Viacom, CBS, and Discovery are on pace for their worst day ever after a flurry of block trades and an analyst downgrade, while Chinese tech companies Baidu, Tencent Music, and Vipshop slept on delisting fears. In deal news, WeWork will merge with a blank check company in a deal worth $9 billion, and Madison Square Garden agreed to acquire MSG Networks. And wrapping things up, Lending Club is on pace for its worst day since 2016. Live from the First Word breaking news desk, I'm Bailey Lipschultz. Charlie?
Okay, we thank you very much, Bailey. And to hear live breaking news over your Bloomberg-type squawk, SQUAWK on your terminal. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, so really this hour, and we are tackling a lot of the most read stories on the Bloomberg, and that includes, Tim, this one. It's about being down and out in the Magic Kingdom when Pooh got fired. This is not good.
No, it's not. Anders Mellon wrote the story. He spent some time in Florida reporting it. He's wealth reporter for Bloomberg News, joining us on the phone from Newark Airport because he's traveling. Hey, Anders, thanks for joining us.
Of course, happy to be with you guys.
So what did you learn when you went down to Celebration, Florida?
Well, what I found down there was really a story of hope in hard times, and a story of how, really the split screen economy that we've seen in the pandemic in the U.S. 32,000 people got laid off from Disney late last year, primarily in the parks and the cruise line department. And as that was happening, the stock price started shooting up and rose to records, and the company's executive chairman, Bob Iger, actually became a billionaire as people were being let go. And that sort of just encapsulates the, like I said, split screen economy that we've seen during the pandemic in the U.S.
Yeah, talk to us. I mean, Disney shares up about 25, 26% last year, and they definitely have, rallied on kind of a comeback. But let's talk about what you found, because I've got to say, reading this story, and I know our producer, Paul, was reading it, and I know Tim's read it, like it just kind of breaks your heart in terms of these people who have been part of kind of the Disney universe, playing different characters, as we all know and love them, and the life that they're leading right now.
Yeah, so what I found down in Celebration in Florida was essentially a group of cast members that had gotten together and together with a local church organized a craft fair where cast members who perhaps had been doing various arts and crafts as a side gig and selling on Etsy, they now do that full time. And once a month they get together outside the church, they set up fold-out tables and party tents, and the community comes out and buys their things and supports them. And this has, turned into a bit of a lifeline for many of them, a way to connect with colleagues, feel like you're, performing in front of guests again, and also, frankly, to scrape together cash to make your car payments and to be able to buy groceries. Mm-hmm. So it was a really, it's a really wonderful thing down there, a lot of humanity, a lot of love, still a lot of love for Disney, but then also, of course, the sadness of the realities of the economy and what the coronavirus has done to it.
Well, as you point out in the piece, Anders, Disney's CEO, Bob Chapek, told Bloomberg last week that Disney is planning to reopen its theme parks very soon. What does it mean for the people who you spoke to? Or are they going to get their jobs back anytime soon?
So we're not sure. A number of people that were laid off in Orlando have gotten called back. Orlando has been open. Disney World has been open since July of last year with limited capacity. The park in Anaheim in California is going to reopen in April, I believe, and people have started getting called back for that too. But the prevailing idea down in Celebration was that there's not going to be a full callback until at least 2022 because people are not going to.
Wow.
Not enough people are going to feel. Yeah, not enough people are going to feel sufficiently safe to travel. And even then, it's uncertain whether everybody are going to get their jobs back, given the various reorganizations that many companies have undertaken since then. So it's a lot of uncertainty.
Hey, Anders, when you've got a job at a Disney theme park, is it a good one?
So it's the cast members, frankly, love their jobs. They love Disney. They love the idea of Disney. They love performing for people. They're always on stage. They're being taught that as long as you're within visibility of guests, you're always on stage. You need to perform. So in that sense, it's a wonderful job, and many of them have great loyalty to the idea of Disney and to the company Disney. Unfortunately, it's common knowledge that they're not paid particularly well. The benefits have gotten better over the years. They are not great, and Orlando is expanding. It's getting increasingly expensive. So these are people that really are the face of the company. But it's been, like I said, a well-known fact that they're not paid particularly well for the job that they really do for the company.
The question is how long they stay. And Anders, we only have just about a minute left here, a little less than a minute.
Yeah.
Considering full employment at Disney, they don't expect for a couple of years. How are these people planning to get by until then?
So many people are, things happen for a reason, and some have managed to actually, make good money on their side gigs and are turning to that full time. Many others are hoping, to come back. Many want to go back. They love Disney. Many of them spend both birthdays, free time, holidays in the parks. So Disney is just it's a big part of life, and it's almost like getting kicked out of the family, getting laid off from the job.
Well, I got to say, your reporting, just incredible. A great piece of writing, and we'll make sure it's out on Twitter. Anders, thank you so much. Safe travels. Anders Mellon, he's executive compensation reporter at Bloomberg News, on the phone from Newark Airport. But this is a most read and a must read. You're listening to Bloomberg Radio.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
So, Tim, it's just about a couple of weeks away. Then we're going to be kicking off earnings season in a big way.
Again?
Happens every
It's
quarter,
true.
by the way.
Hey, yeah, happy new quarter. That's right. Look, I love earnings season. I love earnings.
It's a good, listen, I always call it my gut check on companies. I'm a long-term thinker and a long-term looker, but it is also a way of kind of keeping everybody honest.
And I want to hear from those CFOs about their outlook, especially as more and more people get vaccinated. That is where the real data is going to be.
Exactly. But the chart of the day is going to have to do something with earnings. So we're going to get into it with Dave Wilson in just a moment. In the meantime, back to your top business stories. A look at that trading day. Just about 28 minutes to go, Charlie.
Indeed. Stocks higher across the board. Do want to begin with a headline from the Bloomberg Professional Service. Chrysler parent Stellantis says it will be idling its Warren, Michigan truck plant because of the chip shortage. That's a Ram truck plant. It'll be down from next week until early to mid-April. Stellantis shares up now by 1.2%. Stocks higher. In fact, we are at or near the best levels, at least on the S&P 500 index, on track for a weekly gain. Stocks higher on optimism over the vaccine rollout and after the Federal Reserve freed banks from restrictions on dividends. Oil gained as the dollar slumped. S&P climbing now by 36 points, up by about 0.9%. The Dow's up 236, up 0.7%. Choppy day for NASDAQ, rebounding from earlier losses, up now by 51 points, up by 0.4%. 10-year yield now 1.66%. Gold is up $5 the ounce, up 0.3% to $17.32. And West Texas Intermediate crude up 3.9%, $60.84 a barrel on WTI. New infections are on the rise around the world. Yesterday, more than 733,000 cases were reported, the highest since mid-January. While vaccine supplies in the U.S. are on the rise, Dr. Andrew Pakosh, a professor of molecular microbiology and immunology at the Johns Hopkins Bloomberg School of Public Health, says he remains concerned about what they're calling vaccine hesitancy.
Supply looks like it won't be a problem in the next couple of weeks. The goal that President Biden put out of immunizing 200 million Americans implies that a very large percentage of the adult population in the U.S. will accept the vaccine. And some of the polls that I've been seeing, particularly polls that look at different socioeconomic groups and different racial groups, don't suggest that the vaccine acceptance rate is that high to reach that 200 million goal.
The Johns Hopkins Bloomberg School of Public Health is supported by Michael R. Bloomberg, founder of Bloomberg LP and Bloomberg Philanthropies. Checking some of the vaccine names right now, Pfizer up 1.1%, BioNTech up 0.4%, ADRs of AstraZeneca up 1.2%, Moderna is down 1%, Johnson & Johnson up by 1.4%. Recapping stocks higher, 10-year yield 1.66%, S&P up 37, up by 1%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thank you, Charlie Pellet. This is Bloomberg.
Been a long time crossing the bridge of sighs.
The voice sounds familiar.
Maybe.
Yeah, I could be wrong on this one.
I like it.
What era, Dave?
70s.
Always makes it tougher.
Solo artist, played guitar for Procol Harum before he went on his own.
Isn't there another? It's not like Wheels. No, like is there another song that he did that's really popular, or more well known?
Song that's really popular.
Oh, okay.
We're talking about Robin Trower.
Oh yeah, I wouldn't
Now
have
let
gotten
me
that.
tell you, I mean, sitting here in my home in New Jersey while I'm studying the stock market, I'm listening to Spotify, and that song has popped up a couple times, so I figured it was worth sharing. Plus the fact that it has to do with a bridge, and so does the chart. You know, it's all about a bridge in terms of the gap in performance between the Russell 2000 and the S&P 500.
Sure you're not smoking anything there in that home in New Jersey?
No.
Oh my God, you see the control room. I'm just kidding. I'm just trying to make, put it together. It's Friday. Lighten up, everybody. Lighten up.
It's legal there.
It's legal in New Jersey.
And it's coming to New York, too, from what I hear.
He didn't deny it. No, I'm just kidding, Dave. I'm just kidding.
Never
Having
touched
some
the
fun
stuff,
with
but
you.
that's another matter.
All right, so tell us about this chart.
Okay. It's all about how you kind of bridge the gap in performance between the Russell 2000 and the S&P 500. You know, I looked over a 6-month period yesterday, and the Russell was up as much as 60%, and the S&P 500 gained no more than 20%. So, you know, the smaller company index was up 3 times as much. So how did that happen? And actually, it's something that Mike Wilson touched on earlier this week. He's the chief U.S. equity strategist at Morgan Stanley, and he cut his rating on small cap shares, basically looking at how far they had come and how far earnings projections had come. That's the key. What the chart does is it makes the link between how much the Russell 2000 and the S&P 500 have risen and how much forward earnings. So looking ahead 12 months, you're dealing with analyst estimates, how much they've gone up, and you find the figures are pretty comparable. You know, I said the Russell was up 60% in the last 6 months. Well, it turns out so were earnings estimates, at one point at least. And you look at the S&P 500, the comparable increase was no more than 15%. So it's no wonder smaller companies have done so much better, because the earnings outlook has brightened so much more. And if you want to know what I'm talking about, folks, send me an email. I'll get you the chart, the explanation that goes with it, and everything I do going forward. The email address is dwilson@bloomberg.net. That's dwilson@bloomberg.net.
Dave,
Yes.
talk to me about what this looks like moving forward. And look, you know, we say this every week. The chart only shows what's happened in the past. But what does this mean for the outlook for small caps, and what should we be watching?
Well, I mean, you look at what analysts are anticipating for earnings growth going forward, and they're certainly pretty optimistic here. You know, when you consider, take the second quarter coming up. Analysts are looking for S&P 500 earnings to be up 50%. That's where we are now. Now, of course, you're comparing to a year ago, which is really when, you know, the coronavirus pandemic hit home. But, you know, there's a lot of optimism out there. So the real question is whether this relationship between the, you know, projected earnings and the performance of the indexes, whether it holds up, or, you know, we've kind of seen the move at this point. You know, that's, you know, in part, you know, what Mike Wilson over at Morgan Stanley was referring to when he lowered his rating on the small cap.
So it's like, listen, it's looking at earnings projections and then comparing it to where stocks have gone, right? Different sectors of the market. And you've got to decide whether you think earnings will beat, you know, the expectations, right? And that gives it some momentum to go even further at this point.
Yeah, and what's happening to those expectations? You know, it's one thing if they're kind of staying steady and companies do well. It's another thing if they're going up, and then it's a higher bar that companies have to get over in order to really impress investors.
All right, good stuff. Dave is going to be back a little bit later on with his stock of the day, Tim.
Yeah, I wonder if Dave's listening. I got to get him. Is he listening to Discover Weekly on Spotify? Is that how he's getting his music each day? You know, those custom playlists.
Oh, yeah. It's so cool. Yeah,
out.
well, we'll find out later.
Well, let's get a check of world and national news with Nancy Lyons in D.C. Hey, Nance.
Hey, Tim. The U.S. has offered assistance to Egyptian authorities to help reopen the Suez Canal. The waterway has been blocked by a giant container ship ever since Tuesday, causing a traffic jam that's only continuing to pile up. White House Press Secretary Jen Psaki says it is something they're watching.
We do see some potential impacts on energy markets from the role of the Suez Canal as a key bidirectional transit route for oil. And obviously that's one of the reasons we offered assistance from the United States, or we are in close consultation with the Egyptians about that.
Psaki says they've been told that Egyptian officials are working to remove the tanker as soon as possible. 2 additional tugs will arrive at the Suez Canal Sunday to assist in refloating the ship. More than half the U.S. population will have had at least one vaccine dose by the end of next month, with 2.5 million shots given daily. That's the word from the White House. Bloomberg's Irv Chapman has more from Washington.
The number of infections is rising again as more Americans and their state governors act as though the pandemic is history, the director of the Centers for Disease Control, Rochelle Walensky, indicated.
I know people are tired. They don't want to hear that it's going to take us a little while longer, but it's going to take us a little while longer. Our advice is clear. We're vaccinating really, really quickly. So we just want to make sure that we don't end up in a surge that truly is avoidable.
Dr. Anthony Fauci described a new clinical trial to determine whether vaccinated individuals are still able to spread COVID to their friends. The study will take 5 months. In Washington, Irv Chapman, Bloomberg Radio.
Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries.
All right, get out your whiteboard, everyone, because we're going to have a little Harvard Business School class right now.
Is it about SPACs?
It's about SPACs, but it's also going to talk about startups.
Okay. I know where you're going with
unicorns,
this. I know where you're going
companies
with
that we love. So we've got to go back a few years. First of all, you have the creation of WeWork, right? That's the first thing.
You do,
right?
Adam Newman.
Then you've got like SoftBank really all in, heavily backing the company. Got a valuation, the chart goes up, $47 billion just 2 years ago, Tim. Then we've got what an IPO is going to happen in 2019, and then it's not.
Before the pandemic hit.
Yeah.
And the valuation just gets slashed. And in fact, the company doesn't even IPO.
No, done.
Newman gets ousted.
Out.
The company sells many of the assets that it bought over the last few years. And now we learn today that WeWork has agreed to sell itself to a blank check company in a deal to take the troubled office sharing startup public for $9 billion valuation.
Tied up with a nice bow, we're done. It's done. Isn't that amazing? Like, I read the story this morning, and who would have thunk a few years ago that this is how it would ultimately end? Of course, who would have predicted we'd go through a pandemic?
Yeah, nobody saw this as the ultimate sort of next path for WeWork. But this is so interesting, Carol, because I was thinking about how we were covering this on Quick Take earlier today. We actually use this as an opportunity to talk about the future of work, because in a sense, this is a bet that people will be back in offices. WeWork has corporate clients. It's not just the one-off client who rents a space from WeWork.
Right.
And in a sense, WeWork's investors are still betting that people are going to be back in the office in some way, and the company does have a future. $9 billion, yeah, it is a far cry from $47 billion, right. But $9 billion is nothing to shake a stick at.
The only thing that's kind of interesting that could be in its favor, is that do companies who maybe pare down their owned office space or own rented office space, let people work from home, but every once in a while use a WeWork space to get together?
Yeah. And look, the company builds them out.
Yeah.
It rents them. It's been struggling recently, but this is what it's going to do with the SPAC.
news, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. We've got 13 minutes to go ahead of the closing bell with the Dow, the S&P, NASDAQ all advancing. S&P at session highs right now, up 41 points to 3950, on track for a weekly gain, up by 1% right now for the day. The S&P, as I mentioned, higher. The Dow up 254, up 0.8%. NASDAQ up 69, higher by 0.5%. 10-year yield now 1.66%. We've got gold up $4 the ounce, higher by 0.3% to 1731, and West Texas Intermediate crude now up 3.7%, pairing its gains to $60.74 a barrel. Stocks are advancing on optimism over the vaccine rollout and after the Federal Reserve freed banks from restrictions on dividends. Shares of media giants Viacom, CBS, and Discovery are plunging, extending their recent weakness after both stocks received another in a series of analyst downgrades. Viacom, CBS plunging 27% this Friday. Discovery lower now by 28.5%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thank you, Charlie Pellet. Well, it's been a little over a year since the COVID-19 pandemic disrupted our lives. Every day at this time, we're taking a look at different industries or ways of life that underwent monumental change in the past 12 months. Here with today's installment of A Year Like No Other is Bloomberg's Denise Pellegrini.
Watch for the Tyvek and jackhammers. Home builders are rushing to the burbs as buyers crisscross the country.
Looking for slightly lower density markets, looking for homes that have more space, which you can find further out.
Robert Dietz is chief economist at the National Association of Home Builders.
One of the key features of 2020 was a really limited availability of resale inventory.
And that has buyers driving till they get to the suburb where they can qualify. And Joanne Schaps, real estate salesperson with Houlihan Lawrence, says whether it's a new home or an older one, buying families have a long list of must-haves when they get there.
More space, working from home, needing a gym, needing a playroom, needing a classroom for their children.
As the pandemic eases, will they rush back to urban life and office jobs after this year like no other? Probably not. More than 30% of work-from-homers surveyed by Live Career said they'd quit if they had to go back to work at the office. Denise Pellegrini, Bloomberg Radio.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no.
Who's gonna drive you home?
Honey, please, I'll do the driving.
Drive on.
Excuse me, I want to drive.
Just drive, baby.
It's the question that drives us.
This is the drive to the close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
All right, folks, just about 10 minutes left in today's trading session. And man, what a day. We have been bouncing around. Charlie's been really walking us through the up and down trade. We are near our best levels of the session here. We've got to rally off the lows, and we've definitely picked up some momentum in the last hour. And that means we are on track, Tim, for some gains in the Dow and the S&P this week. Still lower on the NASDAQ. We know there's been pressure on that tech trade, but nonetheless, quite a turnaround in the last hour or so.
Yeah, it really is. The S&P 500, as we heard from Charlie, up more than 1% right now. And I'm also looking at year-to-date for the Dow, 7.5% and 5.2% for the S&P 500. That NASDAQ, just 1.3%.
Amazing. So let's get into it with Jay Littman. He is co-founder and president of Ethic. It's a tech-driven asset manager creating sustainable investment portfolios. Jay is back with us, and he's on the phone in New York City. How are you?
I'm well. It is fantastic to be back with you.
Well, it's great to have you back. So tell us a little bit about how you're seeing the markets right now. It is just big, broad picture here. Volatility, once again, on a day where we often see the major equity averages bouncing around. How do you see it?
Well, I think, we see things in a slightly more long-term manner, obviously being, a passive index provider. I think that the trend that we're seeing is that people are being more cognizant, especially with the new presidential administration, of this new focus on climate, on a lot of the different social issues oriented towards ESG investing, and especially with what the SEC has been coming out and saying, this form of investing with sustainable ESG considerations is really looking to get entrenched. So, we believe that regardless of the volatility, the direction is heading towards those more sustainable investments because this is the way that the regulators are going to be looking at it, and this is the way that the market's going to be really reflecting that.
So do you see that manifesting in the sense of companies actually coming out and making changes to the way that they do business that align with these ESG standards? Or do you see it manifesting in some other way?
Well, I think the reality is we've been seeing it for a number of years, right? We've already been seeing companies recognizing that there are certain things that they can be at the front of the pack around. And if they do so and make that public commitment to really be a leader in their respective field of that space, then they're going to be associated with that and get the brand equity around it. And a good example would be Microsoft coming out and saying they were going to be the first technology company to become carbon negative, right, by their goal, or whether it was Delta coming out and saying they were going to be the first company to go, first airline to go carbon neutral, right? We're seeing companies recognize that you've got consumer demand desiring this, you've got investor demand putting more money towards those companies that are becoming more sustainable, or at least trying to lead the pack. And as a result, you're seeing companies change those business plans, change their marketing messages, change the ways they make products, sell products, run their supply chains. And we believe that we're going to see this accelerate as more demand accelerates from consumers, but also assets fly from investors.
Hey, listen, one thing I wanted to ask you, Jay, and I was looking for a story from earlier in the week that was on the Bloomberg, but it was specifically about fund houses, investment houses that are just watching the tremendous flows going into ESG specifically. And so slapping ESG labels on everything just to attract investment money, even though they might not really be ESG. And the problem is ESG criteria, right? There's not like one set rules that says, okay, you tick off all the boxes to truly be an ESG investment. So how do we be smart about this? And how are you kind of filtering through to make sure it's not a lot of greenwashing that's going on here in an investment?
Yeah, it's a fantastic question because, fundamentally, we don't believe there are people inside asset managers, that are vindictively trying to slap ESG on products and, not trying to make these products as sustainable as they can. But, in reality, a lot of these products are, structurally constrained from being as sustainable as other products can be. And one of the, primary mechanisms for that constraint is just the simple vehicle of something like an ETF or a mutual fund that has to be one size fits all, which is, why what we do at Ethic is so focused on customization and personalization through something called direct indexing, which allows you to get that index exposure, but in a way that's personalized around the specific values you prioritize. We believe that greenwashing is actually a reflection of the constraints of products that have to be built for the entirety of the market. And so when they say things like they are low carbon or what they are addressing social issues, you have to remember that those products have to be served to the entirety of the financial market and can't be as specific as some investors may want, which is why personalization is so important to get a product that you feel is not greenwashed because it reflects what you care about. And, we talk a lot here about this idea of, it should, this is a saying from back home in England, but, does it say what it says on the tin? Right? If it's a low carbon strategy, are there oil companies in it? Right? If it's a social strategy, are there companies that profit from the private prison system or predatory lending, or are doing things that are exacerbating environmental racism and injustice, for example? And so it's really understanding what your priorities are and then looking inside the product to see if it is in fact actually what it says on the tin.
We have to run. I know we didn't really get to talk about women a lot and diversity, but I know that's part of your mission. Do you have 30 seconds here? Because I know, listen, the research shows it makes sense financially to have diverse people at your companies. Just got 20 seconds here. Your thoughts real quickly.
I think, look, if you're a company and you are not celebrating and investing in hiring from half of the population based on gender, you're failing your company and you're failing your investors and your shareholders.
Jay, we'll get you back real soon, I promise. Jay Littman, co-founder, president of Ethic, on the phone in New York City. You're listening to Bloomberg Business Week, just about 3.5 minutes away from that closing bell. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. There you have it. Sound of the closing bell at the New York Stock Exchange, and it is on to the weekend with the Dow, the S&P, NASDAQ late day surge. What a final 30 minutes of trading. Right to the numbers. We'll tell you all about it. S&P up 65 at the close, higher by 1.7%. The Dow rallied 452 points, up 1.4%. NASDAQ reversing earlier losses, up 161, a gain there of 1.2%. 10-year yield 1.66%. Gold up 0.3%, 17.31 the ounce on the gold. West Texas Intermediate crude up 3.9%, 60.84 a barrel. Stocks up on optimism over the vaccine rollout and after the Federal Reserve freed banks from restrictions on dividends. Among some of the bank names, J.P. Morgan Chase up 1.7%, Citigroup up 1.8%, Bank of America up 2.7%, Wells Fargo up today by 1.2%. So an update for the Dow, the S&P, and NASDAQ. As for the overall market backdrop, Troy Gajewski is co-chief investment officer at Skybridge Capital.
We're pretty pumped about this year. You know, we're fortunately off to a really good start. And this is really one of these years where the first shall be last and the last shall be first. So, you know, some of the high-performing, high-flying tech and growth stories last year have really turned into duds. And portfolios like ours that are more focused on value or cyclical exposures like structured credit or distressed credit, which are by definition turnaround cyclical stories, have done exceptionally well.
ThreadUp, that's the online marketplace for secondhand clothing, surged in its trading debut. The company's based in Oakland, California, shares up today by 42%. Media giants Viacom, CBS, and Discovery both plunged today, extending their weakness after both stocks got another in a series of analyst downgrades. Today, Viacom, CBS plunged 27%. Discovery also down 27%. Stocks surge right into the close. I'm Charlie Pellet, Bloomberg Radio.
Whoa, yeah, what I say. Nobody move a muscle.
Bloomberg Business Week. Movers and shakers.
Damn, Stippy, you got some moves.
On Bloomberg Radio.
All right, everybody, wrapping up the final trading day of the week. And listen, Charlie mentioned we saw a bunch of buying and a big rally, certainly into the closing bell. So we did finish at our highs of the session. That meant for the S&P 500 you definitely saw investors taking on risk trade today. 453 names in the S&P 500 higher today. You saw 51 lower, 1 unchanged. And if I take a look, actually, Tim, why don't you do the major industry groups? Let's do that first.
Yeah, so if you take a deeper dive into the S&P 500 and you see the different industry groups, you can see that it was an up day almost all around. Carol, energy leading the pack, higher by 2.63%. Information technology higher by 2.5%. Materials also up by 2.5%. Real estate up by, well, 2.5%. Healthcare higher by 2%. There was one laggard. It was just communication services, down just about 0.3%.
Thank you, Discovery, because Discovery was down. It is your top decliner in the S&P 500, down 29%. That story, concerns about streaming. We've been talking about streaming a lot. We're going to talk about it a little bit later on, actually just in about 10 minutes or so. So there are some concerns, a lot of analysts coming out with commentary on Discovery. So that one really pushing lower. Let's bring in our Bloomberg News global macro strategist, Vince Signorella. He's on the phone in Westchester. Hey, so what do you make of the buying into the close? What was that about?
Oh, this is so machine driven. It's driving me crazy. You know, about an hour and a half before the close, the Dow sank. There were a couple of sell programs that went through.
Right.
And we were barely up 75. And now we're ending up over 400. And I mean, in an hour and a half, the fundamentals really have changed.
No, but it's fun. It's interesting. I know those programs, right? They just kick in. It doesn't matter whether it's the final trading day or the final hour of the last trading day of the week.
Yeah, no, and we've got momentum coming up, and we're going to see some rebalancing, and this could easily all turn around next week, depending upon how the portfolio flows are set up. But it's kind of just, I mean, I talk to traders, and they're ducking and diving.
Why?
You can't stand in front of this. I mean, there are no real fundamentals behind this. The fact that we picked up in vaccines, we still only have about 30 to 33% of the country vaccinated.
But it's going quick. It's going more quickly than I think we anticipated. No,
it is. It's a little more quickly, but we're still a ways off. If you balance the whole story, which is, are we going to get vaccines in everybody's arms in time and get the economy rolling and things reopened before this particular stimulus package runs out? If not, then you have to address another one. I don't think Congress has the stomach for any more fiscal spending, but we'll see.
So you don't think any of the rally that we saw late yesterday after 2:30 and then into today was because of the way that the president talked about 200 million vaccines in arms in his first 100 days, his doubling of the goal?
What I can tell you is that for about an hour, as I watched the market last night before I sat down to dinner into the futures market, futures were up like 10, 15 points. So if this was a real fundamental story, you would have just seen this continue to cascade. I mean, it did eventually in later Asia and Europe, but nobody can yet explain to me, why the stall and then why you see such a big sell-off in the middle of the afternoon that had absolutely nothing behind it but a couple of sell programs.
Hey, Vince, you heard Carol talk about what we saw with streaming, Viacom, CBS, and Discovery. I say streaming, but really this is, we're talking legacy media here. Talk about what we saw this year and then how that trade unraveled today.
Well, I mean, everybody and their brothers jumping into the streaming media business. There's only so many you can really have and so many that people can really afford on a monthly basis. AT&T just exited their direct TV or AT&T Now, so they're kind of stepping aside from the streaming space. I think Viacom probably had more to do with first and secondary issues of basically diluting the shares. But at the end of the day, a lot of those stocks, a lot of those companies have made very, very large investments and borrowed for those investments for content. And if you don't get the subscribers, you're really basically diluting earnings, and I think maybe that's what we're seeing in some cases now.
Hey, just quickly, 30 seconds here. So if we don't get another, going back to what you started earlier, if we don't get another round of stimulus, do you think this equity rally runs out of steam?
I think we're going to see a good 2 months of a rally. I think there's a lot of motivation and momentum behind it. I want to see what happens after that, to be honest.
All right, kiddo. It's 5 o'clock, almost 5 o'clock somewhere. Vince Signorella, you have a good and safe weekend. All right, you're listening to Bloomberg Business Week. Of course, Vince is our Bloomberg News global macro strategist. This is Bloomberg.
All right, Dave, you're up.
Hi, my name is Dave.
Wilson, where are you? Wilson!
Just what do you think you're doing, Dave?
We're going for a price on Wilson.
Open up the door, it's Dave. Who? Dave.
Hey, Mr. Wilson!
Hey, Mr. Wilson, come on in and give us your stock of the day.
That would be Movado Group, Tim. It's a maker of watches, including its namesake line and brands such as Ebel and Concord. The company traces its history back to 1881 and was incorporated in the U.S. in 1967. Movado went public in 1993. The ticker is MOV. The company shares climbed a record in mid-2018, then tumbled as much as 85% last March. They reached the lowest price since 2009. 2009. Movado has since more than tripled, and the rally picked up after yesterday's release of fiscal fourth quarter results. Earnings and sales beat the average analyst estimates in a Bloomberg survey. Movado brought back its pre-pandemic dividend and said it would buy back as much as $25 million of stock. Now, those results came out before the opening bell yesterday, and they sent the company's shares surging more than 18.5%. But that wasn't all. Today, Movado rose more than 10% and reached its highest price since November 2019. And its two-day gain was the biggest since June 2009.
That stock's now up 69% this year.
Yeah, just a classic example of, one of those companies that's been able to ride the wave as people have been willing to spend more. And, it's a heck of a 2 days for the stock, no question. Just taking a quick look here.
Yeah.
And you're talking something on the order of 30%.
Yeah, that's quite a run. All right, Dave, thank you so much. Dave, have a great, great weekend. And Tim Stenovic, you're off and running.
I'm off and running. Have a great weekend. Happy pizza night.
Thank you. You too. You don't have to run
Thank you.
too far. You're actually home.
Oh, yeah, I'm here. Pizza soon.
Have a good good one. Enjoy the
Thanks.
pizza. All right. You are listening to Bloomberg Business Week. Let's get on over to Nancy Lyons. She is in our D.C. studio with World and National News. Hey, Nancy.
Hey, Carol. President Joe Biden is including rivals Vladimir Putin of Russia and Xi Jinping of China among the invitees to the first big climate talks of his administration. As he was leaving the White House to head home to Delaware, Biden was asked if he's heard whether they've accepted his invitation.
I haven't yet, but they know they're invited, but I haven't spoken to either one of them yet individually.
Biden will be hosting the climate talks around Earth Day on April 22nd and 23rd. Biden also weighed in on Georgia's new stringent voting laws signed yesterday by the governor there. Biden says Republicans are trying to deny people the right to vote and calls the measures a blatant attack on the Constitution and good conscience. The laws require a photo ID to vote absentee by mail and places limits where ballot drop boxes can be placed and when they can be used. Investigators in Boulder, Colorado are keeping quiet about the details related to the suspect Monday's shooting at a King Super grocery store. No data has been released as to the suspect's possible motive, moves, family, and friends. Boulder DA Michael Dougherty says that silence is deliberate.
If we share too much about the facts of the investigation, it's possible we'll see a motion by the defense to move this trial to somewhere else in the state of Colorado. And I want to make sure that the people of Boulder have the opportunity for this trial to be held and for justice to be done here in Boulder County.
Dougherty says his team is committed to working tirelessly to resolve the case. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
All right, Nance, thank you so much. So Ted Seides, he began his career at the Yale University Investments Officer under the famed and iconic David Swetson, created his own multi-billion-dollar investment firm. He's founding and managing partner of Capital Allocators. He hosts a podcast by that name, and he's got a new book out by that name. He talks with elite money managers and how they're leading and how they invest. And he is our Business Week Extra podcast. And in this excerpt, Ted Seides, he breaks down how ESG investing can become more transparent. Check it out.
There's a tsunami of capital coming into this space for all the right reasons. And so really starting with Greta Thunberg a year and a half ago, her description of what was happening, Davos just before COVID, every description was about climate change. We know that this is really important, and it will be a very strong secular change in how capital gets allocated worldwide. Now, as soon as money starts flowing, it's not that surprising that people trying to capture their share of it will do, what you call greenwashing. Mm-hmm. But let's not be too short-term about that. If you look over time, the first thing is we now have interest. We have interest in doing things that are better for the environment. We have interest in promoting more socially diverse people throughout the economy, all of which is good for the long term. Now, as that happens, we need definitions. We need to understand in the capital markets and public markets. We need benchmarks. And if you look at the different benchmarks, nobody really knows yet what is a good company, what is a bad company. And that will get worked out, but it does take time. And in that process, I'm not that surprised that you have products that want to say they have an ESG lens for the first time, and maybe they do and maybe they don't.
And that is the founder and managing partner of Capital Allocators. That's Ted Seides, and he is our Business Week Extra podcast. You can hear that entire interview on our Business Week Extra podcast. That's available now at Bloomberg.com or wherever you get your podcasts. He recently just wrote a book. It's called Capital Allocators. It's how the world's elite money managers lead and invest. And listen, this is what he does. He talks with the world's top professional investors, how they invest, how they go about it. It's in the book. It's on his podcast. It's also in our podcast, The Extra. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Do want to begin with an update on that cargo ship that has been stuck in the Suez Canal. Inchcape Shipping Services says the vessel has been refloated from the stern. Ship still remains stuck, but they've got the stern refloated. Another refloat effort will resume with high tide. Separate headline from the Bloomberg Professional Service. President Biden says the Department of Justice is taking a look at Georgia voting bill. Georgia's elections chief is being sued by a group of nonprofit civic organizations that claim a new voting law signed yesterday by the state's Republican governor will make it harder for minorities to cast ballots. Stocks rose to a record today on optimism over the vaccine rollout and after the Federal Reserve freed banks from restrictions on dividends. S&P up 65, a gain today of 1.7%. The Dow up 453 points, up 1.4%. Late day surge. NASDAQ up 161 points, up by 1.3%. 10-year yield 1.67%. Gold up $5 the ounce to $17.32. That's a gain of 0.3%. West Texas Intermediate crude up 3.9%, $60.85 a barrel. Recapping, stocks rally. Late day surge with the S&P up 65, up 1.7%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thanks so much. Appreciate that update. So wait a minute. I thought cord cutting was all about saving money, right? Hard to do, though, as streaming is raising the cost of those subscriptions. Let's get into this story about what Disney Plus and Netflix are up to, and I've got to ask him, too, about Viacom and what's going on with that trade today. Chris Palmieri is LA Bureau Chief for Bloomberg News. He's on the phone in Los Angeles. Chris, nice to have you here. We've been talking a lot about streaming today. So what's up with it? It's like cord cutting is getting as expensive. The new streaming bundle is as expensive as the old cable bundle.
Right, two things. First of all, the sort of incumbent streaming guys are feeling more comfortable, Netflix and Disney, with all of the tens of millions of subscribers they signed up, so they're raising prices. Most notably, Disney Plus today went up by $1 on most of its plans. And the other thing is that we have just more services launching. Just recently, Paramount Plus and Discovery Plus, and in the last year, we had Peacock and HBO Max, and so there's just higher prices and more choices.
So, right, exactly. So what does that mean? Who are better positioned when it comes to streaming services? Because we're going to probably have some winners and losers. Because I don't know about you, but I can barely watch all the stuff that's out there. And I choose not
It's incredible.
to because I got to get off
Some
the
of it's
couch.
really good. I mean, it's the best TV we've ever seen, I think, in many cases. Definitely Netflix, definitely Disney are winners. Disney just amazing in not even 2 years, over 100 million customers worldwide. HBO Max is still a question mark. They started out of the gate at a very high price because they had that traditional HBO subscriber base at $15 a month. Did a really bold move this year, put all of the Warner Brothers movies up for, basically included with your regular subscription. We think that's leading to a lot more subscribers, but they're still around the 30, 40 million mark in the U.S. Peacock from Comcast is a differentiated model. It's got a free ad-supported service, but if you're going to watch all the great content, you're going to have to pay as much as $10. They'll be really promoting that heavily this summer and with the Olympics.
So do me a favor. Tell me, how that the Discovery Plus bundle is doing. I see a lot of advertising. I'm an HGTV kind of gal. But I have to say, even though I used to watch Fixer Upper, I haven't signed on to the Magnolia Network. So what's going on with that?
Yeah, and you mentioned the stock route this week.
Yeah,
media stocks, and Discovery is sort of Exhibit A of that. So is Viacom CBS, which, as you mentioned, launched that Paramount Plus service. These sort of second-tier services, they're pricing them very aggressively. Discovery Plus is just $5 a month. But as you pointed out, does that have enough? So many people still have cable, really 85 million plus households. And so the idea that you would subscribe to that on top of your cable, no, not so much.
Right.
So how much traction do those services have? And that's what the stock market's asking in a big way this week.
Yeah, exactly, right. At some point, those winners and losers. Hey, what does this all mean for traditional cable, though?
Traditional cable is going to continue to deteriorate because we're just two reasons. Well, we're just so accustomed now to being able to watch whatever we want when we want to watch it on all these devices, and this business of going through the traditional scrolling the TV and that is just it's not working for us anymore. The other thing is that all of these media companies are so fixated on getting their subscriber counts up for their streaming services, they're putting their best shows and best movies up on the streaming platform. So you're not getting the top shows on the regular TV. So for that reason, I think the cable bundle will still decline.
Yeah, it's interesting. And even like sports, which we thought was always going to be something that gave the cable bundle, especially, the likes of ESPN, a little bit of oomph. We saw that kind of upended when the NFL, brought Amazon in.
Yeah, well, and part of the new deal with all the networks, even the traditional networks, is that they're going to have the right to include NFL games on their streaming services. So, it's not going to be right away, but, that's the direction they're going.
So when you watch this space, and I'm just thinking about investors, I mean, so, most of these guys are all, held by publicly held entities. What are you going to be watching over the next, 6 months here when it comes to streaming? How do you anticipate, especially as the world reopens, Chris? I do think how much of these services are going to take a hit?
Well, we watched in the last couple of years the average customer go from 2 to 4. So where do we go from there? And we'll be really closely watching the subscriber counts of these newer services, Paramount Plus, Discovery Plus, HBO Max, to see if they can get the kind of traction that Netflix and Disney Plus did.
Right. But I do wonder how much of this eventually, in terms of services, how many people back off. I mean, do we have any numbers, just real quickly, in terms of national surveys of how many services do people, ultimately streaming services, do people kind of sign up for? Is there a limit?
Well, that's the thing. The number forever was 3.
Yeah.
And until it became 4. And so, and all indications are it's going to go higher. And there's situations where people don't even think, for example, of Amazon as being you get it because you wanted the free shipping and all the other Amazon attractions. Oh, and you get all their TV shows too.
That's right.
So that doesn't even in people's minds click as another video service. So they're just piling up, but I'm sure the number will go higher than 4.
All right. Thank you so much, Chris. Really appreciate you finding time. Chris Palmieri, he's Los Angeles bureau chief for us here at Bloomberg News, of course, on the phone in Los Angeles. Well, as you folks, you loyal listeners of Bloomberg and loyal watchers of Bloomberg Business Week on YouTube, Friday's pizza night for our household. So we're going to talk with pizza. We're going to talk pizza.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
All right, everybody, they're around the country. They're also in Canada. They've got a well-known investor and franchisee. We're talking about Blaze Pizza, and we're going to talk with the company's president and CEO, Mandy Shaw. She's going to be our guest in just a moment. First up, though, back to your top business stories, some of the news after the closing bell. Here is Charlie Pellet.
All right, thank you very much. Let's talk about records. S&P posting the best gain in 3 weeks. Records for the Dow, records for the S&P today. Late day surge for a lot of the action in that final 30 minutes of trading. Great reason, of course, to keep it locked into Bloomberg Radio for those fast-moving markets. S&P up 65, up today by 1.7%. Records on optimism over the vaccine rollout and after the Federal Reserve freed banks from restrictions on dividends. The Dow rallied 453 points, up 1.3%, bringing its year-to-date gain to just about 8.1%. NASDAQ up today by 161 points, up 1.3%. 10-year yield now 1.67%. Gold up 0.3%, 17.32 the ounce. A surge for crude oil today. West Texas Intermediate up 3.8%, 60.81 a barrel on WTI. Consumer spending dropped in February. Income also declined as the impact of January's pandemic payments faded. Improvement is likely as more emergency aid is distributed this month. What about the inflation outlook? Claudia Sahm is a former Fed economist, now a senior fellow at the Jane Family Institute.
Some of the rise in prices is going to be a reflection of the fact that what we have been living is not normal, right? And so in some categories we need to see that, right? So these businesses can make money and pay their workers.
The owner of Victoria's Secret raised its quarterly profit forecast for the second time this month after seeing, quote, an unusual shopping surge triggered by the latest round of stimulus checks and the relaxing of COVID-19 restrictions. L Brands, which also owns the Bath & Body Works chain, up today by 3.65%. Again, recapping records for the U.S. stock market today with the S&P up 65, finishing the week at 39.74, up 1.7%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Well, it's Friday pizza night at my home. It has been for years. Love, love, love pizza, as do many Americans, and that is definitely something our next guest knows all about as the CEO of Blaze Pizza, which has restaurants around the country, also in Canada, and can lay claim to one very well-known investor and franchisee owner. We're talking about LeBron James. Let's bring in the company's president and CEO, Mandy Shaw. She is with us on the phone in California. I'm thinking about my pizza, which is why I can't speak. Mandy, nice to have you here. Welcome to Bloomberg.
Thank you so much for having me. Delighted to be here and love to hear that you have your weekly pizza. That sounds like the majority of Americans. I think there's a number like 13% of the population is eating pizza on any particular day. So
that is what. Well, tell me about the last year. Like, how has that been for you? I mean, go back first of all a year. What was going through your mind as the pandemic was kicking off?
Yeah, isn't that funny? A year feels like it, and then it feels like 10 years. Mm-hmm. If you think back to that first week of shutdowns when everything sort of solidified, no one knew if this was the apocalypse, right? So the first thing that we had to do was make sure our franchisees were financially secure. We're a 99% franchised organization. So we gave an industry-leading relief package for 9 weeks. We coached them on PPP. We had individual coaching sessions with franchisees to make sure they could get those dollars that as they became available. We provided other forms of relief. We got tons of vendor donations for hand sanitizer, masks, a lot of the things that had to go into the restaurant to make sure that safety was paramount for our team members as well as our guests coming into the restaurant. And then really where we deepened what is really important to me anyway from a franchise perspective is transparency and communication. We had daily calls with our franchise council. We had weekly all-hand franchisee calls where we said, here's what we know, here's what we don't know, here's what we're going to tell you next week, right? And so if you think about the business, our dine-in sales were still 80% of our top line pre-pandemic, and then they all just shut off.
Wow.
So we had to, what I called get guerrilla, and figure out how we raise awareness that we were still open. You could still come into a Blaze, walk down the line, make your pizza, and take it out. You just couldn't sit down in the restaurant. And, you know, we already had delivery with 2 providers and other like curbside, or carry out and walk out service. But we introduced curbside carry out in 3 weeks' time. I just said, we got to get it up. We got to figure out how to do this and move quickly and make it happen. We added Uber Eats as our 3rd delivery provider, and those were incremental sales. And so we just put together a lot of programs to make sure that we were taking care of our franchisees and getting those sales back in the door as fast as we possibly could.
You know, it's interesting. There's a lot of conversations that we have had with restaurants that, you know, had a digital strategy perhaps, but all of a sudden, because they had to, ramped it up dramatically. Tell me about the digitization of your business and how that strategy has maybe changed because of the pandemic or has been ramped up.
Ramped up, you called it.
What's the word you would use?
No, I mean, we're up 150%. You know, we started in the summer of 2019. We launched 2 specialty crusts, the cauliflower crust, and we were the first national chain to launch a keto crust with 6 grams net carbs. And so right on the heels of that, we also launched a large pizza, a shareable family office space, you know, more like what a legacy pizza looks like, and it delivers better because it's engineered to hold heat. And so we had a 360-degree media campaign to build a digital business, and it was growing. We had an 8-point comp swing from, call it fall of the year prior to just before the pandemic.
Yeah.
And then it dropped out. So from great pain comes great reward at times. What this has done for us is build that digital business. We range week to week from 50-50 to 60-40 in terms of digital versus dine-in. Wow. And what that means for us is greater total top line coming out of the pandemic. Might be a slightly painful way to get there,
right?
Going through all the things that we had to do. But the mass of people who came to off-premise dining, you know, I read some statistics at one point about there's a 600% increase in people over the age of 50 adopting app ordering, right, delivery, third-party delivery, and those sorts of things. That we saw it in the numbers and what these players have been able to accomplish.
Right.
So we got our piece of that, and now as we get dining rooms reopened again, we're retaining 80% of that business or so, which means our volumes are much higher than they were previously, which again is a win for the brand.
Wow, that's pretty phenomenal. Hey, listen, sit tight for a second because I want to talk more too about then kind of what the next year looks like as you guys continue to build out. I know I was reading something recently about, you know, some of the continuing expansion plans and states that you are increasing your presence in. So we're going to come back. Sit tight for a second. We're going to do a little bit of news. We're going to come back with Blaze Pizza's president and CEO. She is Mandy Shaw, joining us from California, and we'll get back and continue that conversation. In the meantime, let's get another check on world and national news. Off to the nation's capital we do go. Nancy Lyons in our D.C. newsroom. Hey, Nance.
Hey, Carol. Health officials say it is too soon to claim victory in the battle against the coronavirus. CDC Director Rochelle Walensky is deeply concerned about an uptick in new cases and hospitalizations.
We know from prior surges that if we don't control things now, there is a real potential for the epidemic curve to soar again. Please take this moment very seriously.
Walensky says we can turn things around if we keep wearing face masks and social distancing. The former head of the CDC, Robert Redfield, believes the coronavirus originated in a lab in Wuhan, China, and began spreading as early as September of 2019. He told CNN he thinks that scenario is more likely than the virus transferring from animals to humans or in a live animal market. Another lawsuit is being filed by Dominion Voting Systems, this time against Fox News. We get more from Bloomberg's John Tucker.
It's a $1.6 billion lawsuit. Dominion says it's filed a defamation complaint against Fox News for selling a false story of election fraud in order to serve its own commercial purposes. Some Fox News employees did elevate charges that Dominion had changed votes through algorithms in its voting machines that had been created in Venezuela to rig elections for the late dictator Hugo Chavez. Dominion lawyers said they have not yet filed lawsuits against specific media personalities at Fox, but the door does remain open. In New York, I'm John Tucker, Bloomberg Radio.
Former President Trump appeared on Fox News last night and said there was never a threat at the U.S. Capitol January 6th. He says that's just a Democratic political talking point. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
All right, Nance, thank you so much. So our Business Week weekend show features many interviews, including this favorite from the week. It was with Emory Law professor Dorothy Brown. She's author of The Whiteness of Wealth, How the Tax System Impoverishes Black Americans and How We Can Fix It. In this excerpt, Brown explains how a rigged tax code specifically impacted her family.
What I found over my 25 years of research is that whenever Black and white Americans engage in the same activity, tax policy subsidizes how white Americans engage in the activity, but penalize how Black Americans engage in the activity.
So dig down into that and explain that. How is that happening?
Yes, so we can start with marriage, which is what got me on this road to begin with. My parents were two equal earner couples. They both worked full-time. My mother and father contributed roughly equal amounts. Contrast that couple with a different married couple that has the same overall income that my parents had, but only earned by one person. One person works in the paid labor market, the other person works at home. Well, tax law gives a tax cut to the couple with the one wage earner, but no tax cut to couples like my parents. And for decades, couples like my parents paid higher taxes when they were married. So what does race have to do with it? Guess what? When you look at Census Bureau data, you find out that my parents, two equal earners, were the typical Black couple, and the single wage earner getting a tax cut couple were white.
All right, and that, of course, was Professor Dorothy Brown of the Emory Law University, and her book out, it's called The Whiteness of Wealth, How the Tax System Impoverishes Black Americans and How We Can Fix It. She, by the way, was also the subject of a recent Bloomberg Business Week cover story, which you can find at Bloomberg.com, and you can hear that entire interview. It is on our weekend show on Bloomberg Radio. It's also on our podcast feed at Bloomberg.com. You're listening to Bloomberg Business Week. We'll continue with the CEO of Blaze Pizza in just a moment.
updates, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Records on Wall Street for both the Dow Jones Industrial Average and the S&P 500 Index on optimism over the vaccine rollout. And after the Federal Reserve freed banks from restrictions on dividends, S&P 500 up the most in 3 weeks amid a late-day surge, ending at a record. Energy producers and health companies among the best performers today. S&P up 65, higher by 1.7%. The Dow up 453, up 1.4%. NASDAQ up 161, up by 1.2%. Now, for the week, we also saw the S&P 500 index advance this week by 1.6%. 10-year yield 1.67%. Gold up $5 the ounce, up 0.3%. West Texas Intermediate crude up 3.8%, $60.80 a barrel. Shares of media giants Viacom, CBS, and Discovery plunged today, extending their recent weakness after both stocks received another in a series of analyst downgrades. Viacom CBS plunged 27.3%, Discovery down 27.4%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thanks so much. Want to get right back to the president and CEO of Blaze Pizza. She is Mandy Shaw, still with us on the phone in California. I want to talk about expansion plans and lots of other things, but Mandy, I got to ask you, what's it like to have LeBron James as an investor, as a franchisee owner, someone who's actually been in a lot of videos, viral videos for Blaze Pizza. What is that like?
One word, fun, right? It's
Yes.
so exciting. You know, LeBron is a great partner in that he actually cares and he makes selective choices about who he, quote, gets in bed with, right? And years ago, he decided to come to Blaze because of our philosophy of clean ingredients, better food, better for you, you know, new way to pizza, upgrade. And so it's a rather informal partnership that just really is fun. Anything that we offer up to him, like those viral videos, he just says, yeah, let's have a good time with this and see what we can do. And it's really just part of his portfolio. And Blaze wins when he wins and vice versa. So it's a very nice additive part to what the Blaze persona is, for sure.
Well, it's interesting too. You talk about kind of things that are important to him in terms of how you guys make your pizzas. It's real ingredients, not frozen. They're made in-house every day. No chemicals, no additives, no nitrates in the meats. I mean, this is a huge trend in the food industry, and we just see it continue to pick up momentum. How is that shaping kind of how you guys continue to move forward? How you supply out ingredients? Tell us a little bit about that.
Yeah, our chef, Chef Brad Kent, was one of the founders of Blaze, and honestly, I rely on him quite a bit, and the concept does, because his background is really unique. He's got a business degree. He's a food scientist. He has worked as a personal chef and was a food designer for some large brands across the country. So he's a very unique chef in that he understands what corporate R&D is about, but he really makes amazing food. So he's one of the first people who worked directly with providers to do things that you would never think of, like take additives and preservatives out of banana peppers. All other banana peppers have some kind of preservative in them to keep that yellow, bright, vibrant color, and we have none of that. So the list is long of things where he has just decided it's important, and he really wants to change the world. He wants to have an impact on food supply and the food system, and showing that you don't have to, compromise when you eat things. It's not, we don't do it in a luxury way. We're not here to, tell people how they should eat. To us, it's the cornerstone of how we want to present ourselves and what is important to the consumer. So anything we put in the restaurants, we put it through that lens of, does it meet this criteria of really being a better product and tasting amazing, right? We're not out just chasing trends just for the sake of chasing them. So it actually is, thank you for mentioning it, a really important part of what we do.
Well, it's a lot, and I got to say, it's a bigger and bigger conversation that we are having when it comes to anything with food. I mean, I think back to conversations we've had with John Mackey over at Whole Foods, conversations I had for years with Steve Ells about what they were doing at Chipotle, like this whole idea of how can we make kind of the whole food supply chain better and provide people with food that is better for them ultimately. Going forward, tell me about growth plans, and has the pandemic sped them up, slowed them down? How has it changed maybe, the expansion or any kind of CapEx spending going forward?
Great question. Really, the slowness that came from the pandemic was related to just COVID delays, not necessarily anyone having trepidation about opening a restaurant. So we opened 20 restaurants last year. We've got 30 in the pipeline this year, which means people might have been a little slower to pull the trigger on new opportunities. But real estate is opening up. So that means this is where the growth moment comes. And particularly after large economic disruptions or life-changing economic situations, franchisees tend to win. People who might be displaced from their jobs and have always had this dream of running a restaurant and have some involvement or have an operating partner who has some experience actually will come seek out brands like us. We have over 150 people in our pipeline who are interested in opening Blazes. We have territories available in some really hot markets because we need to build some density. There's still an awareness proposition for fast casual pizza across the country where a lot of people need to figure out what that is. And to your point a moment ago, figure out what better pizza tastes like.
Yeah, right.
So we have a rough pencil to 800 by 2025, and that's based on sustainable growth. I think there's a lot of concern with franchisees occasionally about, they're just opening restaurants to open them. I am more about franchisee profitability, right? The more I can get you to open a restaurant that has a great return, you will open more restaurants, and then my P&L takes care of itself. So yeah, we have a great track record ahead of us of getting to that 800 number, but in a really sustainable way.
Yeah, really interesting. Is it all going to stay U.S., Canada, or are there thoughts overseas, expand the overseas network, or how do you see it?
Oh, definitely. Yeah, definitely. We're actually already in Dubai, Bahrain, Kuwait.
Forgive me.
Yeah, no worries. And I think this brand has legs almost universally. I mean, pizza is just one of those ubiquitous food groups, right?
Right.
But certainly India, South Korea is a tremendous market. China, sky's the limit. We have a little bit of work we're doing this year on some of the domestic footprint, really optimizing franchisee profitability, again, because the better you can get that machine to work, the faster the proposition sells itself.
Yeah.
So it's a lot of investment that we're making this year from a corporate perspective to make sure that happens. But we absolutely have our eye on other international markets.
I like to think of pizza as a main food group. I'm just going to put that out there.
Yeah.
What's the plan, though? Do you stay private? There's lots of money floating out there. There's companies going public through a SPAC. I've talked to folks with restaurant SPACs who are looking for properties to snap up. What's the plan? Is there anything on that horizon?
I get a lot of calls from bankers.
I bet you do.
Yeah, I think eventually, right? The franchise model is pretty capital light.
Yeah.
So there's not a burning need for me right now to raise a ton of money. But it's one of those things that I describe Blaze as we're at the Harvard business case pivot point of where restaurant companies get, right? You hit 300 to 400 units, and you either invest, like I was referring to a moment ago, put some money into it